Welcome to Canada. One of the first and most important systems to get a handle on here is our tax system. And it's not just about paying what you owe, it's actually the key to unlocking some pretty significant financial benefits. So let's break down the fundamentals to give you a clear and confident start. At first glance, the Canadian tax system can seem, well, a little complicated, a bit like a tangled mess. The goal of this explainer is really to act as your guide, to demystify the whole process and give you the clear, foundational knowledge you'll need to navigate your first tax season successfully.
We're going to tackle this in 5 logical steps. First, we'll look at the big picture of Canada's tax system. Then we'll get into how to define your residency status, which is a crucial first step. From there, it's all about the practical stuff: your income and your social insurance number, the benefits and credits you can claim, and finally, how to file your taxes safely and correctly.
Let's start with the single most important principle of the entire Canadian tax system. Seriously, understanding this one concept from day one will shape every single interaction you have with our national tax authority, the Canada Revenue Agency, or as you'll hear it called, the CRA. That core principle is self-assessment. Now, this might be pretty different from what you're used to. In many countries, taxes are all sorted out and finalized by an employer or the government. But here in Canada, the responsibility is entirely yours. You are the one who has to assess your financial situation for the year and report it accurately. So, what does this actually mean in practice? Well, it boils down to a few key duties. You've got to report all your income, file a tax return on time, the deadline is usually April 30th, and of course, pay any tax you owe. And just as important, you have to provide honest, complete information and keep the CRA in a loop on major life changes, like if you move or your marital status changes, because that stuff can directly affect your benefits. And why does all this matter? Well, because your tax dollars are what fund the Canadian society you've just joined. This money is what pays for the hospitals we rely on, the schools your children might attend, the roads we all drive on, and the social programs that support our communities. Your contribution really is a direct investment in these shared public services. Okay, so before you can even think about filing a return, we need to tackle a really critical question. Are you considered a resident of Canada for tax purposes? This might just be the single most important concept for any newcomer to understand. The CRA figures out your residency by looking for what it calls significant residential ties. And it's not just a simple checklist. They look at the entire picture of your life. As you can see here, things on the left, like having a home, family, or a Canadian bank account, they all strengthen your ties. The factors on the right, well, they suggest weaker ties. Really, what they're trying to figure out is this: where is the center of your life located? And here is the crucial point, so listen closely. The CRA is totally separate from Immigration Canada. You can be considered a resident for tax purposes even if your immigration status is temporary, like if you're a student or a worker. Understanding this distinction is the absolute key to knowing your tax obligations and figuring out what benefits you're entitled to. Okay, let's get into the mechanics of filing. To report your income, you basically need 2 things: a unique identifier for the government and a clear understanding of what income you actually need to report, especially in your very first year. That identifier is your social insurance number, or SIN. Think of this 9-digit number as the master key to your entire financial life in Canada. It's essential for getting a job, for banking, and for government benefits. And because it's so powerful, you have to treat it as extremely confidential. Seriously, never share it unless you're legally required to, because it's a huge target for identity thieves. Now, for your very first tax return, there's a critical rule to remember. You do not report any income you earned before you became a resident for tax purposes. You only report your worldwide income starting from the day you establish those residential ties, which is usually your arrival date, all the way up to December 31st. So, for example, if you arrived on August 1st, your first Canadian tax return will only cover the income from those 5 months. This brings us to a really common area of confusion. What about income that isn't from a formal, salaried job? Think about cash tips from working in a restaurant, or money you earn from a side hustle, like a ride-sharing service. Does that stuff count? The answer is a clear and simple yes. Absolutely. This goes right back to that core principle of self-assessment. The law is very clear. You are responsible for reporting all income from all sources. That includes cash tips, side jobs, any income from the gig economy, all of it. Not reporting it isn't just a small mistake. It's considered tax evasion, which is illegal and comes with some very serious consequences. Now for the best part.
Filing your taxes isn't just an obligation, it's also your gateway to receiving direct financial support from the government. In fact, many newcomers are eligible for key benefits pretty much as soon as they arrive. The most significant of these for families is probably the Canada Child Benefit, or CCB. This is a tax-free payment, which means you don't pay any tax on it, and it's sent to you every single month to help with the costs of raising your kids. And just to give you a sense of its impact, the maximum annual benefit for a single child under the age of 6 can be over $7,700. That is substantial, tax-free support designed to help families directly. And the entire process starts with applying and, you guessed it, filing your taxes. So how do you know if you're eligible? Well, it all comes down to 4 pretty simple conditions. First, you have to live with the child and be their main caregiver. Second, you have to be a resident for tax purposes, just like we talked about earlier. And finally, you or your spouse must have an eligible immigration status in Canada. And it's important to note, this can include certain temporary residents after they've been here for a little while. As you go, you'll hear about 2 main types of tax credits, refundable and non-refundable. A non-refundable credit, well, it can reduce your tax bill all the way down to 0, but then it stops. A refundable credit, on the other hand, also reduces your tax, but if there's any credit left over, the government actually pays that amount out to you. So as the example shows, that could mean getting hundreds of dollars back in your pocket. It's a really critical difference to understand. Okay, this next point is a source of major concern for so many newcomers. When you apply for benefits like the CCB, the form asks for your income from the year before you came to Canada. And a really common fear is that the CRA is going to turn around and try to tax this foreign income. Let me be perfectly clear about this. No, that income will not be taxed by Canada. The CRA needs this information for one reason and one reason only, to calculate your benefit payments. You see, most benefits are income tested, which means the amount you get depends on how much you earned in the previous year. Since you weren't in Canada, they use your foreign income just for that first year calculation. It is strictly for calculation, not for taxation. All right, we've covered the core principles and the major benefits. Let's finish up with some practical advice on how you can actually file your return and, just as importantly, how to keep your personal information safe from scams. You've got several options for filing. The fastest and most popular way is online, using what's called NetFile certified software, and many of these programs are totally free. For those with a modest income, free volunteer tax clinics are a fantastic resource. Of course, you can always hire a professional, or if you prefer, file a paper return by mail. The key is to choose the path that's right for you. So we've covered the foundations: understanding self-assessment, determining your residency, reporting all your income, and accessing the benefits that you are entitled to. The system is truly designed to provide support. So the final question really is for you. What is your next concrete step? Is it applying for your SIN? Is it gathering your documents? Or maybe learning more about the Canada Child Benefit? Taking that first step is the key to successfully establishing your financial life here in Canada.